All right, awesome, very good. So I've got your screen pulled up, Terry, and we have gone live here. And we're on YouTube today. We didn't do a Facebook. We could do Facebook tomorrow if we wanted to. And I'm Rachel.
Have we done Facebook yet?
You say that again?
Have we done a Facebook yet?
We have not done Facebook Live yet. No, not yet.
Okay.
Yeah, we have not done a Facebook Live. Let's see here. So I have I pulled up our agenda today, but you've got it pulled up here and you're making a couple edits. Today we have day 3 of our QuickBooks Online live training. I'm Rachel. I'm managing partner with SOP Solutions. Today, Terry Blackwood is going over, what are we going to be doing? We're going to be doing, we're starting with the locations class assigning. And then we'll get into banking and posting some transactions, so important. And then the reports, generating those reports, customizing those reports. We'll go through the profit and loss, balance sheet, accounts receivable, accounts payable, transaction list by date. That's a really good one. And then the other big topic is going to be the general ledger. And I guess just kind of saving the funnest for last there, Terry, right? That's always fun.
That's
always fun. So we've got one more day of training tomorrow, or we're calling them sessions. And tomorrow will be a very big day because we'll be doing reconciliations. So let's see.
Finding duplicate entries, deleting the duplicate entry, and then I'm going to scroll down just a hair so that they can see.
Oh, for tomorrow? Yeah. It's kind of hard to see that. I was going to move those over, but that's what we're going to go over tomorrow. So the duplicate entries is a really big one. That'll be very helpful.
Duplicate entries is really big. And then it's a common problem, especially if you use your QuickBooks or any other kind of system, that even after doing a reconciliation, you have items that are still not reconciled. They've been reported to the IRS and everywhere else, but they're not reconciled and they're not valid. They never went through the bank. So we'll address how to handle those and how to get those corrected. Most likely it is your CPA, your tax preparer that is managing that. That's a really big, huge deal because it affects prior years. And so we'll talk to that. And then printing and providing financials, just how to take all your information that we've updated, got into the system, we've put it in its buckets. And so now how do we give the reports to who's getting them and what do they look like?
And I think that's so important. What you're saying right there is the reports and who needs them. When the banker calls and says, hey, I need a profit and loss and balance sheet, or maybe they just say, I need your financials. You're going to get some tools today to learn how you can do that and offer those financials.
Awesome.
There we go. We've got ZZ Bad pulled up. Day 3 to see ZZ Bad.
Yeah. ZZ Bad's a work in process.
ZZ Bad, all kinds. I would hate to have to clean up ZZ Bad.
Oh, actually, it's a lot easier than you think. So this is kind of what a brand new company would look like.
That's true.
I had 507 transactions when I started, so I've only posted a handful, but we're going to post a larger number right now quickly, just so we have some more data in here. Mm-hmm. So this would have been a brand new file, QuickBooks. So we did our setup. We told the system how to name it. We assigned different variables and what we wanted for our settings. We looked at users, touched on how to do the invoice to create it as the template, how it goes out, some of the features of QuickBooks. And then we also did the chart of accounts. So how does it work? Where are the assets? Where are the liabilities? How's the equity? What do all of those pieces mean? And they'll come possibly to more light today when we go through and do reports. Yesterday we hit on the profit and loss and the balance sheet and the differences. Right now I'm going to go in. I'm going to set location.
Hey Terry, your audio. I'm having. Are you talking into a microphone or get closer to your microphone? You're cutting out just a little.
Gotcha. So I was not speaking to the microphone and I am moving all over. So let me speak to the microphone.
Yeah,
Thank you.
definitely. And I had that same problem as I'm going through, and this is only our third live. There's a lot of practice that has to go into this. So I've discovered that a lot of the talking I'm doing, you can't even hear. And I'm not even articulating well. So
Oh, I
we'll
think
get
we are.
through it. This is the third time.
It's okay. We don't have to perfect this. We just have to make it really functional, and I hope we are.
Yes.
So I spoke to it, and I want to go back to our piece right here. So what I have are three businesses. I have SOP Solutions, then I have Blackwood Solutions, and then I have a real estate business. And I'm going to make each of those locations, each of those have the potential to bring a revenue stream through. Those are the names that I'm using. None of this is live. This is all fictional. But I'm going to use 3 classes, and the classes are actually going to represent people. But any of my classes, and in my case, people, I could have had products. I could have had products that I offered to any of my locations. It's just a setting in QuickBooks. I can turn on my classes, and I'm going to turn on I'm going to tell it to tell me, hey, if you don't assign a class, let me know. And I'm going to say location. And my location label is going to say location. I could say division. I could say, you know what? In fact, I'm not going to say location. I'm going to make each of these different businesses. So those different business entities, I can track all of them through one bank account or multiples. I can have different classes. And the classes, in my case, I'm going to have represent people. A class could represent product sales as opposed to services that you do. And it allows an elevated feature it allows for better reporting. And that's where we're going to do reporting today.
I think if someone was going to expand any leg of their business, they would put a class. What about sales tax and retail? Would they make that a class, or would that just be, that probably wouldn't be a class?
No, that easily could be a class and would give you some really high level, sophisticated reporting to do something like that.
Yeah.
I would also, at a minimum, break out for my products and categories and in my chart of accounts, taxable and non-taxable revenue.
Yes.
So,
yes.
Just bouncing back quickly. So what I put in here was that we're going to do some banking and post transactions. I don't have enough data in there to really make it functional, but I want to show you how classes and locations interact. I am in the banking module. In the banking module, on the right-hand side, my gear, I have class and I have business. We didn't go through this, so I'll go through it real quickly. On my checks, I want to see the check number as a separate item. I can make my field for my date editable. When transactions come into banking, they have the bank transaction date. You can change that. Copy the bank detail. I'm going to copy the bank detail into my memo, so when I see my memo and it prints on reports, it's going to have the actual bank detail. If it says in my in my memo that it was to Office Supplies or Office Max, but I misplaced it and put the name as restaurant, I probably want to change that. My memo is going to be correct. My name would not be. All right, so now I have my structure set up and I have all these transactions. I have 498 transactions to post. Oh my gosh, it's going to drive me nuts. How do I do this? How do I get these transactions in there easily? So we're just going to grab some that are similar. I got Bank of America. This is actually a bank feed. Right here, I'm going to do Oh, this is in my description. I have Bank of America, but that's actually parking. Bank of America Center Garage. I don't want to create a vendor for Bank of America, but I can create one that says parking. Create. I'm going to create a parking category in my chart of accounts. I'm going to add it. So on my chart of accounts, that's an expense. It's actually an auto expense. This is for me. In my class that I haven't added, I said that I had them. I hadn't added them. So there's TEB, and then let me do one for TRB real quickly. I'm just adding the class. I'm actually in the banking module. I don't have to go to those other places to add these. I can add on the fly. This is adding on the fly. So my businesses, I said I was going to have an SOP. And I'm going to have a business for BS. And then I'm going to have a business for RE. So this was for SOP, as the business, SOP. And this is for TEB. All right. And I got parking again. And it remembers the previous one.
Which could be a bad thing, which is why you have to babysit.
Thank you. Oh my goodness. She didn't say that nearly loud enough.
Did it? I don't even know if it's going to be caught on video, on the video, because babysitting is so important. You have to babysit. Did I spell that right? Let's see, babysitting. Let's see if I can add the banner. Did I spell it right? I did.
So babysitting. Thank you. I love that. That really is awesome.
It needs to be a staple in our banners that we use because it's so important. Really, every single transaction that comes through, you do need to look at it and make sure it's going to be coded correctly, especially if you're using classes and locations, because you just have to go back and undo it and redo it again if you do it wrong.
And when it gets to this point and it's coming into your banking feed, this is the easiest place to make it right. It really is.
It really is. Yeah.
The ability to group things and make things happen in a faster method. And if you just do it right from the beginning, then you don't have to clean up after.
Right.
This just asked me because Bank of America NA, is it always parking? In my case, it would be. In my case, it's someplace that I go often. So I can make this a rule. If I say edit the rule, when it comes in, it's going to say, hey, when it says Bank of America, when I put money out, I won't spend a lot of time with this. You can auto categorize. I support auto categorizing. And it will take rules. Do not auto post. As soon as you say, hey, every time you see Bank of America, put it to parking. What Rachel just said about babysitting, I cannot stress to you enough how it will happen. It will happen and it will show up in meals. Who, how, why, where on earth did you get or think that it's going to, that my Bank of America should be a meal? I got this Baytown Sun. This is actually an office supply. I'm not going to create one for Baytown Sun, but I am going to create a generic office expense. It's a vendor. I don't think I have office expense as a category yet. Office expense, and it's an expense, and it is going to be office general, office expense, save. My class, who did it? I don't know who did it. Let's say that I'm not going to put in the business. I'm omitting the business on purpose. When I go to add, it should not have let me add because I didn't put a business in there. It should have said I needed a business. It's okay. We have something in there that doesn't have a business. Not a problem. I got these bank fees real quickly. Let me just grab a couple. And we're going to call That's small enough. We're going to call all of these bank feeds. Okay. I'm going to take all of my bank feeds, do them at one time, modify selected. I have the green arrow. I went to batch actions. I said modify selected. They're all going to be called bank fee as their name. I did not go, I'm not setting up one for bill metrics, even though it shows up every month. I could, I'm not going to. My category is going to be a bank fee. Again, I can create this expense in on the fly. I'm actually in modify my selected items, but it's allowing for me to do all of these things at the same time. Class. That's very interesting to me. I'm not sure. That should not be the case, okay? And this is, if you hear people yell, scream, like just go nuts over QuickBooks of any sort, especially online, why isn't it working? I had to fight it. I'm fighting it right now. I cannot tell you why the class and the business is not allowing me to go in. I'm going to say apply and add. And it did not. Oh, there we go. Now it wants the class. Now it wants a class. It's asking me and it tells me, hey, I can't post your transaction because you don't have a class. That's fine. I'm not really stressed on it. I am frustrated that it did not tell me that in the other window. Babysit, babysit, babysit. I could have done it right. I'm not suggesting I did or didn't, but my point about babysitting, go back in and do the same transaction. Take the computer, turn it off, and turn it back on. There's lots of ways to kind of get the system to think about it again and to make it right. And I don't think I'm saying the right words there. Babysitting is you didn't respond the way I needed you to. You don't have the information the way I wanted you to. All of those that I just posted, I'm so sad. They all just went to different categories. It did not take when I did my batch operations. I wasn't looking. And actually I was. So I caught it. You might not be looking. There's several ways to figure out that these transactions went to the wrong accounts. And going to the wrong account, I can go into my feed of what's reviewed and confirm. I can confirm where they went to. That's what reporting is all about. We have some transactions. Let me see if I can grab just a few more real quickly, and then we'll jump into our reports. Chevron. A couple of days ago, we decided that Chevron was a gas station. We're just going to call it Auto Fuel as the name of our vendor and post it to our auto category. Will it let us? It is going to let us. So I want all of those transactions. Those are all going to be TEB, and I'm going to make all of those BS for the business. I said apply. I can do groups in groups. I like Chick-fil-A. Not that you would notice. All these Chick-fil-A's. And wow, I really do like Chick-fil-A, don't I? I didn't think I liked Chick-fil-A that much.
Well, wait till we get to McDonald's.
Yeah, really. That is really LOL. So my pay is going to be Chick-fil-A. Chick-fil-A. Oh, I don't know how to spell it that way. I do want to spell it.
So we do have one person watching. You're more than welcome to add in the comments if you have anything. We're running the comments, or if you have any questions. That's what live is all about. But just keep going, Terry.
Yeah, we're most close to having when we get these items up there, this is a brand new file, and it was by intent that we made it a brand new file. Chick-fil-A is not going to be meals. Chick-fil-A is going to be a category that's already in there. We're making Chick-fil-A purchases I don't like. No, we're making Chick-fil-A AMP. It's not. It is not. For the record, Terry did not say that Chick-fil-A was AMP. AMP is, Rachel?
Oh, AMP is advertising, marketing, and promotion. And I should probably say that slower. Advertising, marketing, and promotion.
Chick-fil-A would not be advertising, marketing, or promotion. We're just doing for demonstrative purposes. I do want to create this one right here just because it's going to spread it across the reports that you can see it a little better. And then, again, just, I know it's repeating, but I'm just creating things on the fly as I'm in the system. And it's just to demonstrate or have a better look at our reporting. My frustration here, and I'm past it already, was my frustration was the functions I'm doing where I said we can add on the fly. You know what? 3 o'clock in the morning, I add on the fly all the time. It's not a problem. 2 o'clock in the afternoon, it might not be a problem. All of a sudden at 2:30, I've done 100 of these and it's not doing it anymore.
Well, and you're streaming and we're going live and all those things, and you're using, yeah.
I totally admit that those things are happening. Just as a user, be prepared and understand it's not you. It's not you. These are some of the challenges that you have when you have an online system. So we're going to go down to reports. And in our reports, we're going to do a profit and loss. I don't know if I have any 2019 income, but no, we'll do 2020. 2020 is kind of coming along a little bit. So here's our profit and loss. This is January to April. We don't have much data in here. That's okay. We're looking at it for the whole time period, January to April. If I come up here, I'm in a profit and loss. That's all I pulled up was a profit and loss. I told it earlier that my system was a cash basis. Okay. I'm looking at January through April. I want to see it by months. I want to see what I did each month. Run report.
I love that feature. I just love that month-to-month feature. It's so nice.
It is super nice. And it gives you such a basis of how your company's doing.
It really is. I also love, and I know we don't have to get into it now, but looking at, all the features that it has by putting these things in classes and posting properly, you're able to run percentages and really have a lot of data. So you know how you can plan ahead. This is a great budgeting tool and planning tool.
Absolutely. So my profit and loss is telling me what my operations are doing. This is telling me that I collected money in March and we don't have the other ones posted. This is the money I paid in and the money I paid out. If I do invoicing and I send invoices to my clients, and if I send and I pay my bills when my bills come in, I haven't paid it yet, but I put it in my system. That's called accounts receivable because I'm going to receive money from my clients on an invoice that I put into QuickBooks and they need to pay me money. I'm going to have accounts payable because that's going to be money that is due to me. They need to pay me the money. They need to pay money based on, they're going to pay me money. I'm going to pay them money. I'm sorry. I'm not even getting distracted with that. I'm just thinking in my mind to show you those examples. So where this is pretty crude and elementary, I will bounce out for just a second. All right. Nobody remember the name of this company. Everybody write it down?
I wish I could put my hand over the screen.
Yeah. You know what? We'll block it out when we
Yeah,
edit
I'll
it.
learn how to block it out.
Profit and loss. Yeah, that's okay. So here we're going to go back to. All right. We're going to collapse. Collapse is I have all these other features under the different titles. I can collapse it. When you're doing, and just quickly, Rachel said on her profit and loss, when you're looking at the profit and loss, it's really good for gauging. I'm going to take this company right here. So on my auto, I have auto insurance, I have auto maintenance, I have auto repairs. Their auto insurance is $105,000 a year. That's an item that they should pay attention to, saying, hey, I need to budget this. But auto maintenance and auto repairs is 40,000. They didn't have to break it out. They just did. Uh, your chart of accounts really becomes what's functional for you. Your chart of accounts, expenses and income flow into the profit and loss. Your chart of accounts, your bank account and your loans and your equity and your draws. Your draws, bank accounts, and loans go to the balance sheet. One of the things you don't see on a profit and loss, you don't see, and we talked about this yesterday, and the profit and loss, you're not going to see a credit card payment. A credit card payment, the credit card itself is on the balance sheet. On a profit and loss, you're not going to see the loan amount. A loan amount and that loan payment is on the balance sheet. What you see here would be the interest. And quickly, we're going to collapse this.
So a profit and loss and an income statement is the same thing. A profit,
yes,
right?
thank you. Yes, it is. Thank you.
Profit and loss and income statement is the same thing. If your banker tells you they need your financials, they're asking for a profit and loss and a balance sheet. And typically they're asking for year to date, up to the most recent quarter, and then the previous year. And they want to see that that previous year matches the tax returns that you give them. And that's why it's very, very, very important that you pay attention to Terry. Just listen to her and what she says. It just makes life a lot easier.
It sounds like I'm droning, and I'm not trying to drone. There's just things that, from experience and just things that make life easier. I mentioned this one the other day, and I'm going to actually point it out for this company because they did it extremely well. CC Rewards. CC Rewards is another income. CC Rewards is $40,000 this company wrote off of their credit card because they earned that money and they used it. It's not money that went to the bank. You still have to account for it. It goes on the profit and loss because it's income. Interest income is interest income. Other expenses, other deductibles, other expenses. FYI, life insurance and disability insurance is not deductible. Do not try to put those as a company expense.
Really?
If someone dies, that income, the life insurance policy is not taxable. If you
What about
deduct
key man?
one more time.
What about, like, what if the bank requires that you get a collateral assignment on a life insurance policy and the bank requires it for the loan?
Don't make it deductible. What happens?
Really?
A, it's not deductible, and then B, when you collect the income. So disability income, if you have a
Yes.
disability policy and it's not going to be taxable, well, that's on the basis that you did not try to deduct it before on the premiums as taxable. So don't write those off. Those are other expenses. And our non-deductible, when we would go through this, we may or may not have meals down there because there is a portion that's not deductible for meals. There is no longer an entertainment. Don't try to write off entertainment. Tax penalties. When you pay the IRS and you pay them late on that 941, hopefully you didn't. You need us. We will help you so it doesn't happen again. But if it did, when you record those tax penalties, those are other expenses. They are not deductible. They are supposed to be broken out. So we have this extensive profit and loss. We're going to go and say, because it's already set up, we're going to tell it to look by classes. Run. What the heck? Oh my gosh. It does not need to be this complicated for regular, simpler companies, obviously. All that I want to display is that these are each one of these is a different division. And then I had Texas, okay? So Texas actually had multiple companies within Texas. Between my classes, I was able to say, hey, I need to get a subtotal on my Texas business. I need a total on my other states. And then I need to see how the divisions within Texas operate. Don't even study it. It's not worth it. It's not to study it. It's to tell you or kind of demonstrate the power of what you're working with. That's a profit and loss. Let's go to a balance sheet. And so we talked about the balance sheet. And we will go 0101 16 21 18. All right, Micah, I did a custom date range. I have 2016. I'm starting in January, and I'm going to go through December 31st of 2018. Let me see it by years. I want to see what happened per year. So I have this employee advance. Oh my gosh. Well, in 2017, they had $24,000 outside that they had loaned to people. That needs to be recorded. If you loan money to your employees, it needs to be recorded and needs to be managed separately. It's going to come from payroll. If you use a QuickBooks system, babysit your QuickBooks payroll, but it should reflect it correctly if it's set up correctly and QuickBooks does it correctly. We have loans that the members had. The members had outstanding loans. That's an asset. This top part is an assets. These are the assets of this company. So if the members get money from the company, that's an asset to the company. Accumulated depreciation. So we have our fixed assets and they're broken down. There's $1 million here, 1.108, 1,808,000, $1 million. They have $1 million. Depreciation is $718,000. Their assets are $289,000. All of that is not recorded. You do not record, and you might not even record your asset transactions when you first enter them. Your asset transaction is just an entry that you put in by hand when you bought a computer and it says $2,500, and so it has a line item that says $2,500. What happens though is if you have a loan, you have to put it in separately. What happens, that accumulated depreciation, that's some heavy money. You never touch accumulated depreciation until the end of the year, and you probably, if you do it, enter it through a general ledger or journal entry. And we're about to get to the journal entries here in just a minute. Credit cards. Oh, goodness, we won't even look. Credit cards are not problematic. Credit cards come in and the transactions can feed directly into your banking, very much like you do banking. You apply your credit cards. The credit card balance and the credit card payment is done through the balance sheet. The credit card transactions, and I'll start another window opening. The credit card transactions go to the profit and loss. All right, so as we come down, we have all kinds of things happening. Look at my notes. These are my loans. Mm-hmm. I don't remember how much I have on. Up here, I have vehicles. I have $989,000 of vehicles that I purchased. And my vehicles, I have some amount of money for loans for my vehicles. Let's see if I purchased a vehicle here. I did purchase a vehicle here. I'm jumping out and I'm going to touch on this and I'll come back to it. When this vehicle was purchased, this vehicle was financed. There wasn't any money at the bank. There's nothing being exchanged at the bank. I go to the bank, I sign for it, but I need to get my vehicle onto my balance sheet. I need to get my loan onto my balance sheet. So here I have a 2017 Ford 250, F-250. That's probably all your accountant needs. You can stop right there. It is not a problem. I tell the story. If you look at the QuickBooks that I update, or if I'm working with yours, you will have your storyline all the way through your description in your memo. This memo says, this also served because when I pull up vehicles, I can do my inventory on my vehicles. When I pull up any of my assets, if I do fixed assets, I can see what all my fixed assets are. Those are important to you because that's your inventory of what you own. They're very important to your tax person because that's what gets depreciated. You do not write off a fixed asset. A fixed asset stays on the fixed asset stays on the balance sheet. You write off expenses. Fixed assets you write off through accumulated depreciation. Those are all the things that you don't have to stress about. No one needs to stress about.
Will you say that again, Terry?
I can.
Yes.
So your fixed assets, the way they're recorded is they're an asset. So you're going to record them. If I paid $60,000 for my truck, I would go in and I paid $60,000. I wrote them a check. When I wrote the check, I would say, hey, this is coming out of the bank for $60,000. And it would be a check transaction. And I would say that $60,000 is a vehicle, and I would record the details. That's how I would record a cash transaction to get my fixed asset into my accounting system. This is a loan. So as a loan, my fixed asset is being entered in a journal transaction. This is a general ledger transaction, and I'll tell you how to get there. I opened this one. I'm going to go through the process again. When this transaction, when this purchase, this $59,000 was financed at Alley, I needed to make my fixed asset $59,000. I need my loan at $59,000. My fixed asset is on my balance sheet. The items on my balance sheet do not go to my profit and loss. My profit and loss are expenses and income. My balance sheet is my assets and then my loan. Now, as I pay the loan, I can't expense those either. The loan payment does not get expensed. And I'm hoping, let me see if I can find a good one. Ideally, what you do is, not ideally, but what you can do is when this transaction comes through for the $1,200, the loan payment, it needs to go, and it is going back to my loan account. It's not going to my profit and loss. I do not deduct fixed assets. I do not deduct payments to my loans. When I deduct something, I put it on my profit and loss. When I purchase something that's an asset, it becomes an asset. That accumulation number, that accumulated depreciation is how it's recorded to write those purchases off of my tax return. Balance sheet has assets. Balance sheet has, and assets can be if the company, if I owe the company money, if I own the company, but I owe the company the money, then it's a member advance or a partner advance. Okay. I owe the company this money. Those are assets of the company. I owe a tremendous amount on my credit cards. A lot. Those credit cards The credit card payment does not get deducted from the profit and loss. The credit card payment gets recorded on the balance sheet. The transactions, and it's in a register, the transactions are recorded. The transactions are recorded in a credit card register. I will show you a credit card register here soon. I'm not trying to be the Nazi that drills this in. I didn't mean to be offensive with that term either. So I'm not trying to be nagging about this pretense. I just repeat it so often, and it's very often missed. And I really do want to stress how important these concepts are. Another big one, if you have sales tax, please let us know, and we will help you get your sales tax set up. Sales tax is a tax on top of the purchase. It's not your money. In the state of Texas, it will tell you it's not your money. You owe that to them. It's actually a liability. And clearing that liability and maintaining that is very important. So we have our draw. So we have money that you do take out of the company. If you take out money regularly, that's fine. At the end of the day, if you look down here on my net income, so in 2016, the members of this company, their company made $245,000. In 2017, it made 471, and et cetera. Here's my point. When this company made that money, that's the taxes they're going to pay on. That number, the net income, comes from the profit and loss, profit or loss. That's where the number originates, is on the profit and loss. It comes to your balance sheet. It's called net income. If you ever have to provide financials to a bank, they will tell you, hey, your net income doesn't match your profit and loss. And you kind of go, huh? Well, there's any number of things that could get, if you don't have the exact date range and the exact parameters, or if you make a change between sending the balance sheet and sending the income statement, it will be off. That's what they're looking at, this net income to match the profit and loss.
Says net income on the balance sheet. So did you give them a matching set of financials?
You'd have to.
Correct. So, right. So when you pull the profit and loss and balance sheet, just making sure that those dates are the same so that they match, and look at the balance sheet that you're about to send over to the banker and make sure it says the same number that the profit and loss does. I mean, getting basic.
100% of the time.
We're getting very basic here.
100% of the time. Yeah. 100% of the time, if your financials don't match, you made a change. Because the system is a double entry system, it can't be off from one to the other. If you ever find it that it really is, please share, because I would love to find it myself, because I've looked for it for years and it's always explainable. It's never not been explainable. So
right. I can't imagine that a balance sheet and profit and loss would be off if it came from QuickBooks unless they've ran the wrong parameters. But you would just run those on the same. They don't let you run those together. You just have to make sure you run it from the same year in, and run it cash basis or accrual basis would be the other button that you would need to press correctly. But there's
what Rachel is saying are the only things that would make it off. And,
right.
And it's not off. You just have something set different.
Right.
Yeah. So if we look here, there's my 245, there's my 471, and then my 289. This is my profit and loss. My profit and loss talks about the income. So that accumulated depreciation, it does show up again, right here. So this is where it's being deducted. You don't account for it. You do not put fixed assets on the profit and loss. When your accountant or your tax person figures that number out, you'll come back in, you'll put it in as a general ledger item. So that journal entry, record 2016 depreciation. Depreciation, accumulated depreciation, okay? If your accountant has asked you or tells you that you need to post a general ledger entry for your depreciation, let's go from scratch. New, And we have not even touched the surface of these pieces. And I want to do a more condensed training, Rachel, that I go through these things a lot faster.
Sure.
And we'll do them in buckets so that they can be broken out. That was
Absolutely.
a side note. Thank you guys for letting me do my side note. New journal entry. On my journal entry, I'm going to put the date. It's typically 12/31. 12/31, let's do 21. And then this is depreciation. And I have accumulated depreciation. If you don't already have, I can't believe you won't already have this unless you're a brand new QuickBooks account. And they typically have it as a default account. If they don't, you will need this. So accumulated depreciation. This is on my assets, but I'm deducting this. So when I deduct an asset, I'm doing a credit. And I'm going to do $45,000. All right. And this is going to be section 179 for a truck. All right. And then you want it's a one lump sum. It's not going to be, it won't be just one item. It's one lump sum 90% of the time. So now my expense needs to be a debit. My expense will always be a debit. And how that works, debits and credits. If I'm in my cash account, I'm in my bank, and go to Office Depot and I buy paper. When I buy that paper, my bank account is going to be credit $75. My office expense is going to be debit $75. I lessened my asset because I took it out of the bank. I increased my expense, because in increasing the expense, that's how I deduct it. That is like accounting 700. It's okay. I said it. It's in the ether.
If you were going to say it and it was going to scroll across the bottom as a banner, what would you say?
Expenses are 99% of the time debits.
There we go. And we're just going to have that scroll across because we're just having fun learning about this too, right?
So you can also scroll it across after that.
Mm-hmm.
A refund of an expense is a credit. The refund of an expense is a credit.
Oops. The refund of an expense is a credit. And expense is a credit. Does that need an exclamation point? Probably not.
Well, it's just the one statement is the your expenses are debits. The refund of an expense is a credit. Perfect. Yeah, that's cool.
Expenses are 99% of the time debits. Do we? That's funny. It looks funny.
Okay.
But it's true. Expenses, most of the time, almost all the time, are debits. The refund of an expense is a credit.
So what happens if you look at your credit card, and let's go to save, yes, without saving. So if I go back to my banking, and this group right here had lots of credit cards. So when this credit card comes through, and I'm looking at all of these transactions, these are going to go debit. All right. I'm debiting the whatever that account is, the phone bill. I'm debiting interest. Okay. That's an interest charge. So I'm going to debit my expense. I'm going to put the credit in my credit card. When I pay my credit card, my money's going to come from the bank. And I'm making these statements. I'm going to start over. I'm going to make this statement because it's the flow of money.
Mm-hmm.
So the flow of money is I debit my expense and I put a credit in my credit card account. if I was posting this in a general ledger entry, if I'm going to do a general ledger entry, and a lot of people do this. So we need to reimburse somebody. Okay. So I have office supplies. I'm going to debit. I have office expenses. I'm going to debit $50. Okay. And this is on the credit card. Then I have my auto expenses, and that was $400. Okay. And then I'm going to have material. Material.
Oh, shoot. We have a comment.
Please.
And Samantha did it at 12:13. Sorry, Samantha. Keep going.
Hey, we're only 7 minutes late.
Right. I'm learning. Keep going, Terry.
Okay. So here, all of these expenses, they didn't come through the bank for whatever reason. I need to post this to my credit card account. I already have a credit card account for my MasterCard. I'm debiting the expense, and then I'm going to credit my MasterCard. Okay. These two numbers in a journal transaction, they have to equal. This function that I just did would be putting this information in here manually. Okay. I don't have my credit card linked. I don't even have a register for my credit card. That's not true. You do have a register, but I need to get this in here manually. The other way that you could do this, because you do have a register. You know what? Let's look at registers real quickly. So I have my banking. Boom. There's banking. These are all the feeds that are coming through from the bank accounts. Okay. Then I have my credit card. And these are all the transactions that I posted to my credit card. Go to register. When I go to the register, this is where once I accept it from banking, this is where the transaction lands. In my register, I can see all these expenses for my credit card. Okay. Those are all the expenses for my credit card.
Nice. Well, we have a credit card question. Can I put it up real quick? And I am going to show Samantha's question. And thank you, Samantha. This is our third live, and I'm learning how to do the comments. But do credit card fees that we pay to Square, do the fees that we pay to Square when customers pay go on the P&L? I'd love to answer this question because this is a fun one. And then, Terry, I want you to listen and make sure I'm answering it correctly. So when Square, so the customer pays by Square, right? So the money goes into Square, and then Square sends you the net amount, and then the net amount goes into the bank account. So you're running a cash-based system. Therefore, the fees are already included in what got put into the bank account. So maybe you can say it in another way. Unless she ran an accrual-based system, then the credit card fees would go on the P&L. But if she's running a cash-based system, the credit card fees don't go on the P&L because she's getting a net amount from Square. And then the second part of that is, isn't there an advantage from a 1099 perspective?
You went lots of different places. Mm-hmm. So one of the things, Samantha, if you could tell me how you, the bottom line is yes, absolutely. Your credit card fee goes on the profit and loss.
Period. Where would it go though?
So what happens is how you're collecting.
Right.
If your processor pays, right here. So if your processor pays, if you pay the processor separately, so if your processor pays you $1,000 because you invoiced your client for $1,000 and you collected all 1,000, then your processor charges you to collect that transaction. I bill 1,000, I collect 1,000. American Express sends me a statement and says, "Hey, you owe me $75 of that 1,000.
Mhm.
That would just be in this, in what this account is that I have pulled up is merchant account fees and bank fees. And I'm thinking this year that they had some, so payment tech. Down here where this says payment tech,
Right.
this payment tech fee, that's an expense that American Express pays you and it comes into the bank as 1,000. Payment tech charges you, and here's $222 for that transaction. That's how it got to the profit and loss.
But Square, where they work a little different, and because I know I get my payments from Square, and they put the net amount of the money into your account. They don't do it separately.
And I think that's a setting. But even if it's not,
Uh-huh.
I do know. And so that scenario, what happens is you bill your client $1,000
Mhm.
and they pay you 925. There's a
Right.
couple of different things you can do. So if, and it's not that I'm suggesting it's best practices, but it
Mhm.
certainly works and depends on how many credit cards you receive. If you're doing an invoice, you can go back into your invoice and you can put a line item that says credit card fee. And the credit card fee of $75 would go in there. You're going to send it to your merchant account chart of accounts. Then when you adjust that, because that's going to be a negative, your $1,000 went down to 925. 925 is going to match when the Square piece comes in. If you have lots of clients that pay the same way, if you have lots of clients that pay the exact same amount and you're managing lots of credit card payments like that, that is really tedious. It is tedious at best. The other process that you could do is just have the $1,000 at the top do a journal transaction for Square will give you a statement of all the fees that they've taken, and you can do a journal transaction for the Square.
But if
Okay?
Square put the $925 in your bank account and you never recognized the $1,000 as income and you never created an invoice and you did your invoice through Square, then the money's just coming through the bank account. It's 925 and right
And,
there
no,
wouldn't be,
and it was never acknowledged in
it was
QuickBooks.
never acknowledged as revenue in the first place.
Correct.
So you didn't receive $1,000 of revenue from Square and your bank account came 925. So you're reporting as revenue 925 rather than 1,000,
Correct.
which is the one likely way. I know that's the way that my Square money comes through. It comes right into the bank account. It's a net amount, but I have other clients just like this. It's the payment check where the gross amount comes through. And I think you're right. It's a setting. There can probably be a setting within Square where they give you the gross and then they give you fees separately, but I'm not sure if there is. I know with me, they gross it out.
I'm old. So I started with credit cards like back when they like had the thing and you had to roll it across your credit card and it made an imprint through carbon copy. So I've seen so many different systems and so many different computer systems and everything in that interface. So we've come light years, and and some people, I have clients that's exactly why they opt. It's not the merchant account fee that they decide on a credit card vendor. It's the ease of use. Whatever it is that you're using with your system, I'm happy to look at it and make sure that it records it correctly. I'm very much in line with what Rachel's saying about just having it come through. If there's a credit card, not even having an invoice, and you just record it for the net amount that you receive. What do you want to make sure of at the end of the day, especially if you have a lot of credit cards? You get at the end of the year, once, which is the process now, the Schedule K. That's a 1099-K. When you get that 1099-K, see how closely the fees are in line with your credit card. And I just can't tell you without looking at it. If it's giving you the net that it's reporting for what you collected, or if it's giving the gross. And that's something I should know. I just don't without looking at it. But that would be the only time it really makes a difference. Except if you have the same amount that you're charging a whole lot of people and something gets rejected,
Yeah,
yeah, we'll find that. Ooh, that's not a fun one at all.
Square's okay with it, but that's definitely, that was a great question, Samantha. I labored that for quite some time with the situation I had. So and
Um,
I
and, and, and send us the actual specifics on it, and we're happy to look at it.
yeah, absolutely, absolutely.
So we're right at 12:30.
You did
I'm
great. I
happy
learned
to take
so much
more.
again.
Well, I'm glad. Tomorrow we'll do a wrap up. I'll touch on and talk to a lot of different pieces. Tomorrow there could be a lot of good tidbits because I'll just kind of hit the highlights on the tidbits, and assuming and hoping that those are really useful. We'll do a reconciliation. We'll look at what the transactions look like when they come into the register, how to delete them, how to find when it's more than one. I didn't touch, and I said I was going to, but really, it didn't seem that important. But if you have invoices in your system and you're doing an accrual basis, you come here and it says who owes you. So I sent an invoice to someone. I sent an invoice and they need to pay me my money. This is detail. It says that these people were invoiced on this date. This is the invoice number. This is who the customer is, and this is how much they owe me. If I go back, I can do the same thing. If I have my payables in there, we didn't typically do payables. Who do you owe? Your 1099s. Your 1099s are a big one. Your 1099s, whether you're going to do accounts payable or not, set your vendor up as a 1099 vendor. Just click the box so that you're managing and pulling those totals out separately.
Makes life easier.
Yeah. Thank you guys. Thank
Very
you.
good. Well, thanks, Terry.
Thank
We've
you,
got that
Rachel.
wrap up. I need to figure out how I'm going to wrap this up. You know, this is day 3. Maybe on day 4, I'll come up with a good wrap up, or maybe Samantha might have an idea for us.
Put it on all of them.
Right. So, I can close. So I am going to end the broadcast, and thanks again. It was a good one. Appreciate you. Bye.
Great. I'll call you soon. Thanks. Bye.